evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly Video for August the 9th, 2018, and we're talking sell-off. We're going to talk tonight about sectors to watch. Going to get some insights on what's the leading, what's the lagging, and any opportunities within these sectors as we plot and plan and potentially are starting to see the very beginning of a sell-off into resistance in the equity market. Of course, that is yet to be determined. But if we do get our sell swing, how can we play it? A couple of ways to do that would be to buy volatility, would be to short equity markets, would be to buy puts, or would be to buy inverse ETFs, just to name a few. But if you're looking at individual sectors, we get hints, we get clues from strong bullish or offensive sectors, but also weak and defensive sectors. When we're looking beneath the headline market, beneath the indices to individual sectors, we typically look at 9 of them. The top 3, financials, technology, and then consumer discretionary. I might even call that retail, consumer discretionary, retail. Those are considered bullish or offensive or risk on names. So if we're seeing strength in here, that's a good thing for the overall market. And if you're looking to go short, these things on trend line breaks could be good opportunities. We'll get to that in a second. These in the middle are industrials, materials, and they're kind of considered neutral or moderate sectors, and then energy. However, beneath all 3 of these, we have defensive or risk off sectors. These things tend to do poorly when the market's going up, or at least show a relative weakness. And they are consumer staples. It's a P. Staples, consumer staples. We're looking at V as healthcare. And finally, utilities, which act like the bonds. So if utilities are doing well, that's not necessarily a good sign for the market. And the same thing for our consumer staples. And we look at these for our XLF, XLK, XLY, and then in the middle, XLI, XLB, XLE, XLP, V, and then U. All right, what is going on? Well, we tend to compare these with respect to where they are at the top right, middle right, or lower right of their charts. So just a quick little overview, and that's what this is. A quick overview shows that our offensive names are all at the top right. Middle names happen to be, well, industrials are in the middle, materials are up here, but energy is down at the lows. In fact, energy, XLE, is our weakest of our 9 sectors. P is toward the middle lower, V upper right, and finally utilities creeping up back up here. So what is this telling us? It's still overall net bullish, and this is just a 15-minute chart. We can take this to our 60-minute chart and take a look at that. It's the same picture, but this way we can see more information. And so we'll finish up with a daily graph, but just quick comments here. XLK Technology. We've been seeing these names. These include the monsters of tech, right? The technology sector, back at the highs. So is the Nasdaq. Financials up at the highs, but not quite at the same highs that the Nasdaq or technology names are. This chart's a little bit too close. We'll pull back to the daily to see the differences between financials and technology. XLY, consumer discretionary and retail names. We had a video on that not too long ago, which showed strength. So consumer discretionary retail, that is a strong sector at the moment. Compare that with staples, XLP, which is showing a downswing in the most recent market volatility. V is healthcare. It's kind of its own stock, its own sector, but it's one of the strongest. It's kind of a sleeper sector to me. And finally, XLU. We'll finish up by talking about the daily chart patterns. Now, this is where we make our determinations. So looking at the short term, that gives us intraday plays and very, very short-term swing trades. But now we can see the bigger picture. So once again, let's talk health of the market. by looking under the market at sectors, starting with our top 3 bullish or offensive names. Financials is just at the peak of a sideways trading range. So financials does have a potential sell swing opportunity, and that's going to travel down to Goldman Sachs, Morgan Stanley, Bank of America, Citigroup, and others. So XLF financials are well beneath their 2018 highs from January, and that's not the case in technology. We can draw our little trend line to see that technology also has this rising pattern, and that's the same in the Nasdaq, which is close toward its all-time high, roughly up against 7,500. That's technology. We've been talking about these components inside of the XLY. It's your retail names, Macy's, Bed Bath Beyond, all the other stocks we've been discussing that are at this breakout potential. So continue watching this. It may be a hidden sector most people aren't looking at, but the XLY, or consumer discretionary, and beneath that, we can sort of change this to XRT for the retail sector. We have some trade plans on in the retail name, and extending over, it also is at its new high. Did not get a break, did not get range expansion down. So far, the retail sector, which is a large part of the consumer discretionary sector, has maintained the sideways trading range with a potential breakout. Compare that with financials, XLF. Not a whole lot to say about XLI and B, that is industrials, materials. They are toward the midpoint, also in their sideways rectangle trading range channels. Not a lot to go on there. XLE Energy is at the high, but similarly forming a potential breakout pattern. Potentially disturbing, if you're looking at this from a risk-on, risk-off sector standpoint, is this persistent strength in staples, consumer staples, XLV healthcare, and finally, just recently, XLU utilities. So continue watching these. If you're a bullish, you don't want these things to keep creeping higher. And if you're bearish, that's exactly what you want. We'll finish up by talking about the broader market and focusing on this upward trend line pattern. This is our S&P futures, 2860. That is just shy of 2875. So on Tuesday night's video, we called out a sell swing dominant thesis. Alternate thesis is if we break above these pivots, we may see a rapid short squeeze toward 2875 and then 2900. But as of Wednesday and Thursday, the 2 reversal candles and even weaker, broader volume, that still favors our downside swing bias. So take a look at volatility futures, take a look at buying premium or buying positions in the VIX, or shorting stock, or buying inverse ETFs, or looking for relative strength and weakness, especially weakness, of similar stocks if you want to play a swing trade down away from these levels going forward. Take care, be safe as always. This is Corey Rosenblum with your Theo Nightly video for August 9th, 2018.